Welcome to this week's edition of the Mortgage Morsel. I'm Dan Paladin, and this week I wanted to speak about an article I just read entitled The Perfect Loan File. Thought it had some great points in it, so I thought I'd bring you a few of those bullet points this week and see what you think. Basically, it states that the media has it all wrong when it comes to securing an approval or satisfying credit. Those are not the issue or that difficult, quite frankly. The hurdle is the rigorous document requirements. As we all know, it's a ton. Okay? The fix, though, is scan, copy, email, fax, deliver every aspect of a borrower's profile, financial profile, that is. A key aspect to this, though, is the consumer or that borrower's mindset. If they want to make it a battle, it will be. But if they're patient with these redundant document requirements that underwriters obviously are asking for, it'll make everybody's life easier instead of, again, making it a battle. So it comes down to mindset from the borrower. Obviously, we try to prepare them so they can keep an open mind and just supply the documents that we need. Along with the perfect profile, the perfect loan file, obviously it starts with our, the LO, mine, the pre-approval interview, which of course includes job history, residential history, reviewing assets, and credit. So we act as a filter to match the qualifications of a mortgage transaction to specific underwriting guidelines for a specific loan program. It's our job to determine if this scenario is approvable, period. Then we gather docs to support that outcome. And those documents, of course, are going to include LOEs for everything. In regards to, let's say, credit, it's going to be inquiries, names, if there's different names on there spelled wrong or what have you, you've got to explain it, addresses. Obviously, if there's any collections late, charge-offs, those all have to be explained as well. When it comes to assets, we have to source and explain any non-payroll related deposits over $500. And now, any large withdrawals have to be explained. And along with those asset statements, we need all pages. If it's numbered 1 through 5 or 1 through 3, you need them all. Can't tell you how many times we get 2 pages and it's numbered to 3. Last page blank. Get it, but we need it. It's numbered. Can't be altered. Can't be blacked out with anything just for privacy reasons. Have to be unaltered. Federal returns need all schedules. Don't need state. Get a lot of state, and I always say don't need them. But all schedules on the federal returns. If you're self-employed, we need K-1s. If you own over 25%, then we need the corporate returns. It just goes on and on. If you're retaining property, then those guidelines come into play. If you've had a short sale, if you've had a foreclosure, there's different guidelines depending on the profile that may make the file simpler or just more paper intensive. So back to mindset with the consumer, the borrower. You can either make it easy and not fight, or you can make it a battle. Hopefully that's helped with what we would call the perfect loan file. But the bottom line is we have to hard copy guideline document every borrower's financial profile. So that's it with this week's edition of the Mortgage Morsel. If you're following me from my video blog, feel free to follow me on Twitter and Facebook. Current rates over here to my left as well, and the Discount Deal Corner. And we will see you next time on the Mortgage Morsel.